Welcome to Knowledge Update channel. Recently, NFRA has issued a circular providing a clarification on very important NAS requirement with respect to non-accrual of interest on borrowing. The issue may arise in certain cases where the company has taken a borrowing and the company doesn't have a financial position to make repayment of borrowing. Plus, the lender and borrower, they both are in consultation for the non for further negotiation or one-time settlement of the loan in such a fashion that the interest may be not payable by the borrower. So in that case, whether interest is required to be accrued, or the company can take a stand that interest is not required to be accrued as it is at final stage of negotiation. So this circular provided by NFRA dated 20th October 2022, it provides a clarifications, guidelines with respect to Ind AS requirement. Let us first understand the facts of case. In the particular case which has been discussed, that the bank borrowing was taken and the borrower was unable to make repayment. So because of the default by borrower, bank has classified it as NPA, non-performing asset. Due to the severe financial crunch, there was a discussion was going on between the borrower and lender, and it was at a stage where the one-time settlement may be done by the bank. Now the question was that can the interest on the loan where the company is being failing to make a repayment since last few period, whether that interest may not be recognized because of the fact that the borrower and lender are under negotiation and it is likely that the interest may not be payable and there can be a settlement wherein the amount may not be payable. So that was the case and situation. Let us analyze the situation with respect to the Ind AS requirement and the guidelines which has been provided by RBI, by NFRA in this requirement. So the action by bank, I think the first point which was there, the bank has stopped recognition of interest income, right? So we are talking about the accounting from the borrower's point of view, whether borrower has to accrue or not. For that, if you just look at the bank point of view, bank classifies NPA and bank has not recognized interest income, and that was in compliance with Reserve Bank of India's requirement. However, as per RBI norms, the memorandum record of accrued interest on NPA is required to be maintained. Management was negotiating one-time settlement with the bank. However, there was no legal release by the bank from interest payment. So these are the main two important points which has been listed by NFRA, saying that even though you are saying that the amount may not be payable, however, there is no legal release. There is no contractual undertaking understanding which has been signed by both the parties, and non-recognition of interest income by the bank is not the point of understanding, not the point of contention for the borrower whether to accrue or not to accrue. Now, if we just look at from the borrower's point of view, the borrowing which is taken by the company, it is called financial liability. As per Ind AS 109, financial liability is required to be classified and amortized at amortized cost using EIM, effective interest method. So financial liability or borrowing which is taken by the bank is required to be classified and measured at amortized cost using effective interest method. We just look at what is effective interest method. For applying effective interest method, the future cash flows to be estimated without considering. So future cash flows are required to be estimated without considering possible future cash flows. So what happens that when you apply effective interest method, you make calculations of the future expected cash flow. However, it is not talking about the possible lower cash flow that is not being allowed or acceptable position as far as Ind AS 109 is concerned. And it talks about the contractual obligation. That is also very important things for this. So only on the basis of proposal or negotiation for one-time settlement, that cannot be the base for reducing the future cash flow when you calculate EIM. So it was concluded by NFRA, and it has been clarified that as per India's 109 is concerned, financial liabilities are classified and to be measured at amortized cost. For doing at amortized cost, you would apply effective interest rate method. And for EIM, uh, by just one-time settlement, which is negotiation which is going on with the bank, that is not the point of contention with respect to non-recognitions. Interest is required to be accrued and recognized as far as the EI method is concerned. That far, if there is a non-recognition or non-accrual of interest, it is called non-compliance of Ind AS. So if you are auditor of the company, it is the responsibility of the auditor of the company to modify the opinion, provide a qualified opinion with the impact on these particular financial statements. So with this, friends, I'm sure that this will be useful. If you have any questions, suggestions, please feel free to be in touch with me. And any issues which you feel need to be addressed by way of this knowledge update channel, I'll be more than happy to receive your feedback on this. Thank you once again very much.